Hello, ladies and gentlemen. Thank you for joining me today on Bitcoin Summer. This is your host, Brian. My producer, Jay, is missing somewhere in the middle of the Pacific Ocean. As I explained last week, we are moving away from the discussion or interview episodes with my producer, and I'm going to be flying solo for the foreseeable future until I can possibly find some interview guests or people that are willing and able to come talk to me. But as of right now, I'm trying to feel my way through this, so bear with me, and I hope you guys stick strong with the show, because I am trying to feel my way through trying to do solo shows, and I'm not quite sure exactly how that's going to look right now. Do people even want to listen to me talking directly into a microphone just by myself? So this is the first episode with that format, and we just released, I just released a video on our YouTube page. I've been doing a series of Lightning Node tutorials, and my latest installment is channel management, or opening your first channels on your Lightning Node. So please go check that out on YouTube, and there is also an Umbral node setup video, and please update if you are running an Umbral node. Please update. The new version is out, so update that today. What I wanted to talk about today, since all of our interview episodes that we recorded right during the bear market, end of May, early June, those are all out in the wild now, and now we're in the present. Today is August 20th, and Bitcoin is popping like crazy, and I wanted to go back because I think it's kind of getting lost now on the later episodes that I've been listening to, is why exactly are we in Bitcoin? For me, there's a lot of different reasons why I'm in Bitcoin, and it looks different for everybody. But I think one of the main important things to think about is we are front-running a wall of institutional money. We are front-running the smart money, the big players. And what this means is, with any sort of investment, is if we can outsmart them and get there first, we will benefit on the upside of that. Now, philosophically, this is a lot different than being a complete Bitcoin maximalist, which I am, and thinking that it's going to level the playing field, or at least give us a better measuring stick in order to store our wealth and store our labor. So philosophically, let's push that aside. I'm just merely today talking about investment. This is an investment podcast, and let's just look at it today as merely an investment vehicle. Now, I don't believe that it's only just an investment vehicle, but the appreciation of the Bitcoin price does keep people in it. Let's take a look today at the price. We did hit 49,000, and I had predicted last week, if you listened to the episode, I predicted that we'd hit 46,000 because there were these certain options plays. There were these options that were purchased right around the $46,000 level that were expiring last Friday. And it was a huge bet. So go back and listen to that episode if you're curious. But I had called that it's going to hit 46,000 by last Friday. And that was on Sunday. I had recorded that. And within hours of me recording it, it had topped 46,000. So I didn't know where it was going to go this week. I was sort of expecting a little bit of a cool off, which it kind of did. And we were down right in the $44,000 range, and now we're sitting at $48,792. So $1 will get you 2,049 sats. A sat is one 100 millionth of a Bitcoin. So it's divisible by 100 million. And I don't think I've explained that fully on this show before. So $1 will get you 2,000 sats. And I just wanted to make that clear for everyone out there, because I haven't really dove really deep into sats. So another big reason why Bitcoin is such a great investment is its scarcity. Now, 89% of Bitcoin has already been mined and is out there in the wild. And our market cap, which means all of the wealth that Bitcoin stores right now, it's almost at the $1 trillion mark. We hit that mark back in March, April area, and we rose quite a bit above that, but we're at 918 billion right now. So we're about to top over that 1 trillion mark. And I see we have a little bit of wall of selling at 50,000, and we're seeing a little bit of resistance at 49,000 here today. But we're looking at a much longer time scale. And when I talk about short-term price moves here, it's just for fun. It's, if you were going to put $100 in this week, it might be fun to try to time the bottom, but it's all a rounding error. So on this show, we do talk about time horizon and having a low time preference. And what that means is our Bitcoin investment is a long-term investment. And it has nothing to do with these short-term moves. And so back during our very long correction and consolidation period, I was a buyer at Bitcoin again. And I don't have any more fiat. I don't have any more dollars, and I am sitting on a nice gain, even just from my small amount of buys during this consolidation period. Now, as I've said before, I've been in since 2018, but that was just a tiny little bit of my investment portfolio. And as the years went on and I kept doing more and more research and learning more and more about Bitcoin and what it can mean for the world, that's when I started to get heavily into it and got really heavily into it at the end of 2020. Here we are today in August of 2021, and people were calling for it to go down to 20,000. I saw people calling that Bitcoin was going to be going down to 5,000. To me, it was laughable, because if you look at the on-chain metrics, if you follow people like Willy Woo, you understand that supply is getting taken off of these exchanges. And when you take supply off of these exchanges, there's no place for the price to run except for up. But today I wanted to talk about on the episode is this institutional money coming in, but not just institutional, the adoption of banks. And mainly in the form of this company called NYDIG, and that's New York Digital Investment Group. I think that's exactly what it is. I could be wrong. It's a big company out in New York, obviously. And what this episode is going to focus on is NYDIG being a sleeper Bitcoin bull. And quietly, because I don't hear a lot of chatter about this, but what NYDIG is doing is quietly infiltrating the mainstream banking market. And so today I'm going to focus on a podcast that came out on Frank Chaparro's podcast called The Scoop, and it was an interview with Patrick Sells, who's the head of bank solutions at NYDIG. I will be focusing mainly on that today, and did a little bit more of my research as far as these banks that have been shit-talking Bitcoin for years and saying it's going to go to zero, it's a scam, it's a Ponzi. But central bank digital currencies are coming out across the world. I think they're so far behind on technology, and government's not good at all about getting things off the ground and workable. So I think we're many years behind those. But I think China is going to be the first one to have their digital renminbi. And what CBDCs, central bank digital currencies, are going to be doing is taking business away from banks, essentially. People won't need banks anymore after these governments start implementing their own digital currencies, because what they'll do is issue government wallets that you'll just have on your phone. Now, so many negative implications of this. I don't even want to really get into all the negativity surrounding CBDCs, but one of the main things is they were even talking about, in order to get people to spend, in order to people to get, people to not keep it in their wallets and to go circulate their money throughout the economy, which is what this system is propped up by, this consumerism, is they will take value out of your account over certain periods of time if you're not using it. And that's kind of what they're doing to our bank accounts right now. Definitely, if your money is sitting in a bank account, you're earning a negative interest rate on that. I don't care what your percentage rate is. We're printing a 5% inflation rate right now, year over year. So what that's meaning is we're losing, and that's by CPI, and there are many different reasons why CPI is a completely bogus measurement, because it's not measuring things like healthcare and things that people actually pay for. We have to claw our way out of 5% hole, and that's being very generous. I'm thinking with money printing and everything like that during COVID, we're looking at more of a 10%, 15% debasement of our dollars. So what they're going to actually do is actually physically do that and take money out of your account. And I don't know if anyone's been poor in their life out there, but I have. And when you're poor, banks don't like you, and they charge you all sorts of service charges when you aren't keeping money in their bank account, which is odd because you're the customer, but it doesn't seem that way. It doesn't seem like the customer's always right when you don't have money. And so all of these companies, and I'll show it later, all of these banks are not allowing their poor customers, because they don't know what they're doing with their money. They can't be trusted with their money. But they're definitely onboarding the wealthy. So what we want to do as Bitcoiners is get in before the wealthy comes in. The wealthy people that are part of these, that are customers of these banks, are getting more and more opportunities, and it's unfolding faster than we can blink. And we need to get in before that wall of money comes in, not just from the institutions, but from these wealthy clients of these banks. We need to get in, but we know that it's happening. So that's why I'm going to focus on this great scoop episode, this podcast episode of Frank Chaparro's podcast. So let's dive right into it. Thank you for joining us at Bitcoin Summer. So this is awesome. Let's start here. We're going to be talking about NYDIG and how they're onboarding wealthy clients and even just normal run-of-the-mill people, middle class, and even probably lower class, day-to-day, just normal bankers. They're onboarding people into Bitcoin while we talk about short-term price movements, while we talk about it's a bear market, while we were talking about how Bitcoin's going down to $20,000. This stuff is just churning on in the background. And another thing that's happening is this ETF is just looming over us, this Etf Approval. There are dozens, maybe not dozens, but there are probably 10 to 20 companies that have filed for an ETF with the SEC. Not one has been approved yet, but the SEC chairman, Gary Gensler, is starting to hint that it's imminent. So Grayscale, who has the biggest Bitcoin trust, it's based in the U.S., and they definitely have the most concentrated trust or ETF in the world as far as their assets under management. And Grayscale's doing all sorts of things. They partnered, I covered this on a previous video, but they partnered with Bank of New York Mellon, and that's the oldest bank in the United States. And they are really close to the SEC. They know a lot about regulation. Barry Silbert, who's the head over there at Grayscale, he's the head of the trust. They just hired an ETF head that's going to push for the conversion of the trust to an ETF. This is going to open the floodgates for institutional investors and just even investors who have a bunch of money sitting in their 401ks and in their IRAs. That is extremely bullish as well. It's not just these banks getting into it, it's also the looming ETF. So again, we need to have our money in Bitcoin before all of these things become reality, and they already are slowly becoming reality. But once the dominoes start falling, it's going to be very, very hard to put the genie back in the bottle. So this just came out. The $10 trillion asset manager. Everyone knows what the company Fidelity is. Everyone's heard of Fidelity. They're a big player. They're online brokerage. Huge, huge wealth management company. They literally said this, quote, "Bitcoin is the key focus now." Bitcoin is the key focus now. This is a $10 trillion asset manager. Bitcoin hasn't even topped $1 trillion. I'm not saying Fidelity is going to throw their $10 trillion into Bitcoin, but my point is you have 10 or 20 of these companies putting in 1% or even 0.5%. We're going to start seeing that price move up. There's nowhere else for Bitcoin to go but number go up. So you're seeing the emergence of a real asset class. That's another quote from them. You're seeing the emergence of a real asset class. Now Bitcoin is being described by these big bank players, these big brokerages, as a real asset class. A real asset class. What's the other real asset class? Real estate. I mean, they're getting lumped in with real estate. This, to me, is extremely bullish, and bears are just absolutely clueless right now. They have no clue what's going on. So let's get back on to the topic of NYDIG and this conversation with Patrick Sells from the head of Bank Solutions. So what's happening is Patrick Sells is strategizing Bitcoin solutions alongside these banks and credit unions across the country, across the U.S. And he was the guy, before he came on with NYDIG, he launched the first Bitcoin Rewards debit card. And that kind of ecosystem is going to be huge for Bitcoin as well. And there are a bunch of cards emerging, Gemini card, BlockFi card, and all of these cards, and Fold card, all of these cards where you earn Bitcoin through your purchases. I mean, that's a dollar cost averaging on a level that we haven't seen before. And those are just starting to enroll this year. And I know the BlockFi cards just came out because I just got mine about a month ago. And that first purchase for me just finally happened. The first Bitcoin purchase that they were forced to, purchase Bitcoin for me, or they probably have it on their balance sheet. But once I remove it from them, once I withdraw it, that's mine. That's in my pocket. And they're forced to find that somewhere else. And so this is all causing a supply squeeze. Again, get your money in now, because this supply squeeze is happening. And you thought the price run from 4,000 last year to 40,000 or 50,000 or 60,000 this year was crazy. We haven't seen the rest of this bull market yet. And I think it's going to be I think it's definitely going to be elongated to the end of the year, but it's also, I think, going to move beyond that, and we might not see as crazy deep corrections as we saw in the past. There will be corrections. It's a free and fair market, one of the only one that exists in the world, and that might be a great buying opportunity down the road, but I just don't see the 80%, 90% drawdowns that we've seen in the past. Those happened early days of Amazon, but those that have hung on to Amazon throughout the years, including Jeff Bezos, have become very, very, very wealthy people. So a couple of the key takeaways that I got from this podcast episode was NYDIG now partners with a company called NCR, and I had never heard of NCR before, but they're the number one global software provider for retail and hospitality. So I did a little deep dive with that because I used to be a bartender. This is the company behind the Aloha POS system. That's a point of sale system that my bar used to use. And if you've ever been to a bar or a restaurant before, you've seen the bartender or server typing in your order into this computer screen. That is typically an Aloha system. Now, this company is directly involved with they are the owner of the Aloha POS systems. Now, talk about entrenchment to bars, restaurants across the country. I mean, that is really, really big. They didn't really get into this, but I'm curious as to whether they'll be working on giving restaurants the option to accept Bitcoin through Aloha. But what I'm starting to see through my own eyes, through all of these different clues, is that will be a thing down the road. I mean, we're just seeing this being adopted so quickly. I'm almost guaranteeing that down the road you'll see an option to pay with Bitcoin through Aloha, and hopefully Lightning Network, because we can keep the fees down and stuff like that. We're going to be doing episodes later on in the Bitcoin space, kind of an intro to Lightning Network, because we haven't done that yet. I've just have my videos, which have been setting up Lightning nodes and setting up Lightning channels. And I'm going to continue with those series because those have proven to be very popular, but I haven't done a basics of Lightning yet. So my listeners out there who are more newbies or just getting on board right now, don't worry, we're going to be doing a deep dive into the Lightning Network. And I already have that show outlined, so that should be pretty quickly here. Maybe even next episode, I'll see what I have time for. So also, the NCR company who partnered with NYDIG, they're the number one ATM software company and tech solution company for banks. So we're getting into the digital side or the interface side of accepting payments or ATMs, a system of ATMs. We saw the ATMs exploding down in El Salvador because they're getting prepped for September launch of that being a legal tender down there in Central America. Another huge part of this interview was listening to NYDIG and NCR. They are giving turnkey access to 90% of the banking institutions in the United States. 90%. How many is that? I mean, that's I don't know the exact number, but that's a ton of banks. So that doesn't mean 90% are going to be using the Bitcoin system, but they're going to be giving access to 90% of banks. All they have to do is say, I want it. And more are doing that because they're getting their lunch taken away by the central banks across the world. And it will make them obsolete if they don't get on board with alternative asset classes, and that includes Bitcoin. And it basically only includes Bitcoin. I mean, they have not a lot of other options right now. They will still be probably providing mortgages and loans and things like that, but as far as money goes, people won't need to deposit their money in a bank anymore. So where are they going to get it? It's going to be very interesting to play out. When Patrick Sells was asked how many people are actually going to turn the key out of this 90%, the answer was emphatically a lot. A lot of that 90% of banks are going to turn the key and be providing Bitcoin solutions to these banks. That is huge. As it stands today, if they don't sign any other banks over the next 12 months, over a year from now, or wherever it was last month, probably July is when the interview took place, over the next 12 months, so that puts us middle of the year 2022, we have 1,000 plus institutions will have functionality across all of their services. So, of course, that number will only grow over the course of this next 12 months. There are currently over 5,000 banks. That's over 20% of banks will be unrolling this tech within 12 months. Over 5,000 banks. Keep in mind, however, this is a big caveat. Top 100 banks represent 81% of total bank assets. So we're still not talking about the bulk of the money, but we are talking about a huge number of banks, and if they're getting into Bitcoin early, they're going to be better off financially themselves. So when are the big bank players going to hop in? Like, when? That's my question, is when are the big banks, this 81% of the total bank assets, when are those top 100 banks going to pop in? More on that a little bit later. So let's continue to my key takeaways of this. Usually decisions like this, as far as moving huge amounts of money around, it takes years and years and budget reconciliations and meetings and planning to roll out. It takes years. But we're seeing the foot on the gas pedal because customers are screaming for these Bitcoin related products. This is, again, extremely bullish. I'm going to keep repeating myself. This is all extremely bullish. So much of the demand for Bitcoin across the country is damped down by an access issue right now. It's not an aversion to Bitcoin, it's an access issue. So once these people have the access through their already obtained bank accounts, we're going to see a lot of this flip to just normal, everyday, basic people. Half of banking customers today say they would be an instant buy if it was natively built into their bank account. That's half of banking customers. So when will we see the big names, Chase, Bank of America, JP Morgan, rolling out checking account Bitcoin purchases? No one wants to be the first, but everyone is going to want to be number two. No one wants to be the first mover in this space. They're going to be seen as heretics, and they may be rubbing the regulators the wrong way, but everyone's going to want to be the second. The industry will move so quickly after the first mover is announced. So who will it be? We don't know if any of the huge players are a part of the 1,000 plus bank mix that is mentioned by Patrick Sells. But one thing is for sure, that it won't take long for the others to follow once the smaller banks start eating their lunch. So these smaller banks are going to start pulling capital away from the bigger banks, and we're going to see more of a distribution and a decentralization of the wealth into these top 100 banks. Once JP Morgan realizes that their lunch is getting eaten, they're going to have to dive headfirst in. And so it's inevitable one of these big banks will start having solutions, even just right through their bank or checking or savings accounts. So the big four is comprised of JP Morgan, Bank of America, Citigroup, and Wells Fargo, four biggest banks in the United States. They have a combined $9.1 trillion in assets, and that's more than half of the market, half of the institutional banking market. So let's break it down one by one. JP Morgan, Jamie Dimon, big hater of Bitcoin, fought its adoption through JP Morgan for years. He is publicly hated on Bitcoin. In May, he kind of acquiesced. Sort of. He said, "I don't care about Bitcoin. This is May. This is May of this year. I have no interest in it. On the other hand, clients are interested, and I don't tell clients what to do." So he hates it, but clients are begging him for it. Customer demand is forcing their hands. Bottom line. So July 22nd of this year, it was announced through Reuters. This can be found online. JP Morgan will allow all of its wealth management clients access to cryptocurrency funds. A couple of the four products they will offer is GBTC and Osprey's Bitcoin Fund. I think that might be the Canadian Bitcoin Fund. I could be wrong on that. So not quite there, but increased demand for the underlying, that's for sure. Still giving a backhand to unwealthy clients. So this is what I was talking about before. They are not allowing their poor clients to buy Bitcoin or even get GBTC, even get a proxy. Apparently, the rest of us, like I mentioned before, should not be trusted to make our own financial decisions. This dam will eventually break. I have no doubt about it. If anyone out there is JP Morgan Chase clients, there are other options out there that will treat you much better. Basically, yourself. Become your own bank. Buy Bitcoin. Put it into cold storage. Read and listen to all the podcasts about it, because you will learn so much about locking down your stack and making sure it's safe and making sure it's away from the hands of these people who think they have your best interests in mind by not allowing you to get into the best asset class in the world. So let's break down Bank of America's journey. So they warned back in January of this year that Bitcoin is the mother of all bubbles. Bank of America's will is being bent by customer demand as well, though, as we'll see. CoinDesk reports July 16th of this year, Bank of America has approved the trading of Bitcoin futures for some clients. I wonder who those clients could be. Probably wealthy clients. The big money is entering. Get in before them, folks. Citigroup, June 25th. Can you see a pattern here? Middle of the year. Oh, everyone's acquiescing. Their customers are screaming for this stuff. They're screaming for Bitcoin. Citigroup establishes Digital Assets Group, quote unquote, within its wealth management department. They're going all in and even go as far as offering NFT and other highly speculative crypto. So Citigroup is even going way crazier on the risk spectrum end. They are not shying away from this. In March, they stated that Bitcoin is on the tipping point and could become preferred currency for international trade. Citigroup, pretty bullish. One of the big four banks, pretty damn bullish on Bitcoin. Wells Fargo, May 19th, 2021, Wells Fargo set to offer crypto fund to rich clients. Also, it was just announced that they are now hiring crypto positions that have been posted online. Here we go again. The only people that will be getting access are the top of the top. Big money rushing in first because they want their wealthy clients to have the advantage over the unwealthy clients, the way that it's always been stacked in this country, the way that it always will be if you don't opt out of that system and get into Bitcoin now. Please, folks, I implore you. No company wants to come out as the first to offer Bitcoin. They simply don't trust that class. They simply don't trust them. These 1,000+ smaller companies see the market opportunity, and the big banks will be forced to capitulate once they realize all of their money is being taken out of their pockets slowly but surely. And that's just my opinion, but I mean, I can see this coming down the pike. The writing's on the wall. So another huge takeaway that I took from this interview are many more banks and fintech companies will be offering Bitcoin credit card rewards. As I briefly mentioned before, Sells says it's a way to transform every fiat transaction into a moment of wealth creation. I like that quote. Transform every fiat transaction into a moment of wealth creation. So they're working on a product to convert your current unused hotel or flight or other credit card points into Bitcoin. So what happens is, think about the points that are sitting on your credit cards right now. The miles, the points, it's all a bullshit point system, and it's always like you need like 1 million of these points and you only earn a couple points per purchase and all this stuff. So like the payout is usually not very great. But think about all of those points that go unused at the end of the year. There's only so many hotel rooms you can stay in. So if you spent enough to earn 5 hotel stays that you can't use, what do you do with that money? So they're working on solutions literally to convert that money, to convert those points into Bitcoin. I mean, that's genius. I love hearing about stuff like that. So let's move on to credit underwriting. This is a huge thing that I've been thinking about as I start calculating what's going to happen in the future for me and my family, we hold this Bitcoin, but I don't want to sell it. So what are we going to do with it? We, as it stands right now, can't really use that as collateral for the bank for when we want to get a mortgage or when we want to get a loan to start a business. We can put our Bitcoin into these companies that will pay out interest on it, and also we can take out a loan against it. But it's not proven to be completely safe, and also those assets are being rehypothecated, which means they're being used by that company for them to make money. And there is definitely a risk of that getting stolen or hacked off the line. Remember, the Bitcoin network has never been hacked, but companies have, and exchanges have, and you can get your Bitcoin stolen if you keep them on those exchanges or with these rehypothecation companies. And it is always just extremely advised to keep it in your own cold storage, keep it in your own wallet. And we're going to be doing wallet videos down the road, so please hit subscribe and please like and please share. We're going to do all of these Bitcoin basics first, and then we're going to start exploding into the broader realm and the broader implications of Bitcoin. But I want to get these basics nailed down first. So NYDIG is working with banks, regulators, and they're going to train the industry on how to put a credit value on Bitcoin. I love this. This is amazing. This is so bullish. This means people are going to be so disinclined to sell. Number go up. Put simply, they're going to count your Bitcoin as assets when considering you for a new loan. This is going to lower your APR. This is going to lower your rates because now those assets are a part of your family's assets. And or they're going to let you borrow more money at the end of the day. So like I said, you're looking to buy a house, you're looking to do this, you don't want to put it into a company like BlockFi or Celsius and take a loan away from it because you're a little bit afraid of it getting stolen. NYDIG is working with these banks to train them and telling them this is a safe asset. Now, I'm not quite sure if they're going to have you store it with them. That could be a possibility. So you got to outweigh these risks, but it's going to be so bullish for the price and so bullish for Bitcoin holders if we are actually looked at like normal human beings that hold very viable assets, very viable, scarce digital assets. So one final point, they're working to bring down the current unreasonably high interest rates that when you borrow against your Bitcoin. I know Celsius does like a 1% if you do, I think it's a 25% loan to value. So that's super low. But as you get more to the 50% range, it gets in the territory of 9-10%. And NYDIG thinks that this is way too high of a percent. The market should dictate a lower percentage rate when you borrow against one of the hardest assets in the world. So they are going to be training the banks to kind of learn and build it into their models as to how to borrow against the Bitcoin. And I'm going to wrap up there. So as you can see, as I've laid out very clearly, and what this interview lays out very clearly, is that we need to jump right now. We have been needing to jump since last fourth quarter of 2020, or, December-ish area. If it could be the case that everyone could have bought at $4,000 in March of 2020, yes, that would have been awesome. But you're not late. You're early. Everyone that I've talked to that are so skeptical about putting their money into Bitcoin are all saying the same thing. We're just too late. Look at the price. It's $48,600. You can buy less than one Bitcoin, and you are early. This is going much higher, not just this cycle, but it's going much higher over the course of 10 and even 20 years. It's going to be outrageous what this price is going to be at because the printing never stops. So the number of dollars keeps growing higher, which will keep increasing the price of Bitcoin. And if you're not in by then, you're going to be kicking yourself right now for not buying at 48,000, thinking it's way too high. I'm going to leave it there, folks. Thank you for joining me today. If you see Jay anywhere out there in the Pacific, please let me know. We miss him dearly. And I will see you next week. Good night.